So Nvidia looms large. Does that make or break whether your bullishness comes to fruition moving forward?
I mean, I know investors are really anxious.
Tom Lee just went on live television and made one of his boldest calls yet on Nvidia. And what he said doesn't just reveal where this stock is heading. It exposes something much bigger happening inside the entire artificial intelligence trade right now. Something most investors are completely missing.
And Nvidia has not performed well the last few times it's reported.
Tom Lee isn't just any analyst. He's one of the most followed voices on Wall Street. When he speaks about a stock, people listen. And right now, every single eye on the market is pointed at one company, Nvidia. But here's the thing, this isn't just about Nvidia's earnings number, it's about what that number tells us about the entire artificial intelligence economy. Because right now, the market is at a crossroads. The biggest technology trade of the last 2 years is showing cracks, and Nvidia sits right in the middle of all of it.
That is one of the most important companies in the world, in the middle of the biggest structural change in the world economy. So I think Nvidia still is a great story. It really wouldn't change our thesis if the stock reacted poorly.
Tom Lee isn't exaggerating when he says that. Think about what's actually happening right now. Every major technology company on the planet, Microsoft, Amazon, Google, Meta, is racing to build out artificial intelligence infrastructure. And almost all of that infrastructure runs on Nvidia chips. We're talking about the picks and shovels of the biggest technological gold rush in modern history. And Nvidia is the only company selling the shovels. That's why this earnings report isn't just another quarterly update. It's a referendum on whether the artificial intelligence boom is real, sustainable, and worth what the market has already paid for it. Billions of dollars in bets are riding on what Nvidia says tonight. Now, to understand why the stakes are this high, you need to know what's been happening in the broader technology sector leading up to this moment. The Nasdaq, which tracks most of the big technology names, is the only major index that's actually down for the year. The so-called Magnificent 7 stocks, the biggest names in tech, are mostly in the red. Names like Salesforce, Snowflake, Workday, companies that were supposed to be the direct beneficiaries of the artificial intelligence revolution, have been getting hammered. Investors are starting to ask a very uncomfortable question. What if the artificial intelligence wave doesn't lift all boats the way everyone expected? And that question is what makes Nvidia's report so critical tonight. Because if Nvidia delivers, if the numbers confirm that demand for artificial intelligence chips is still exploding, it would send a signal to the entire market that the thesis is still intact. But if there's any disappointment, any hint that growth is slowing, it could crack the entire artificial intelligence trade wide open.
I go back to the live stream yesterday from Anthropic. I think that was critical in giving a little bit of comfort to the market, in particular the software industry.
Even before Nvidia reported, the market was looking for any signal it could find. Anthropic's live stream, one of the leading artificial intelligence labs in the world, gave investors a brief moment of reassurance. But a moment of comfort isn't the same as a confirmed trend. The market needed something bigger. It needed Nvidia. Here's where it gets really interesting, because on the surface, the numbers look incredible.
They're going to put up good numbers because the hyperscalers are basically is spending $670 billion this year.
$670 billion. That's how much the biggest technology companies in the world, the hyperscalers, companies like Amazon, Google, and Microsoft, are collectively spending on artificial intelligence infrastructure this year alone. That money flows directly into demand for Nvidia's chips, so yes, the numbers should be good. On paper, Nvidia is almost guaranteed to put up a strong quarter. But here's the part that Wall Street is quietly wrestling with.
Doesn't mean that the stock is going to trade in kind, right? The stock has been stalled. It's run a little bit into the print. So a great report doesn't necessarily mean great price action.
This is one of the most important distinctions in investing, and most people get it wrong. A great company and a great stock are not the same thing. The price you pay matters just as much as the business underneath. And right now, Nvidia has already rallied going into this report. That means a lot of the good news is already priced in. Traders already bought anticipating the beat. So when the beat actually arrives, who's left to buy? This is the trap that catches investors over and over again. They see a great earnings report, they expect the stock to go up, and then it doesn't. Or worse, it drops. Because the market doesn't react to what happened, it reacts to what happened versus what was already expected. So let's go back to that original question, the one that started all of this. Does Nvidia make or break Tom Lee's bullish case for the market? We're halfway through this story, and the answer isn't as simple as you'd think, because just as Tom Lee is making his case for why Nvidia is the foundation of the entire bull thesis, something else is happening in the background that could blow that thesis apart entirely.
When Piper Sandler downgrades tech, and then Bank of America's credit investor survey says the AI bubble is now the #1 risk for the first time ever.
Let that land for a second. The artificial intelligence bubble is now the single biggest risk that professional investors are worried about. Not inflation, not interest rates, not geopolitics. The artificial intelligence bubble, for the first time ever, that's the #1 concern. Piper Sandler, one of the most respected research firms on Wall Street, just downgraded the entire technology sector to neutral. And Bank of America's survey of credit investors, the people who lend money to these companies, are now saying that artificial intelligence overbuild is their top fear. What does overbuild mean? It means that companies might be spending far more money on artificial intelligence infrastructure than the actual economic returns will ever justify. Think of it like building 100 new shopping malls across the country, except nobody shops in person anymore. The construction companies make money. But eventually, someone has to reckon with all those empty malls. That's exactly the fear the smart money is starting to price in.
There's two things that can't be true at the same time. We can't have this massive overbuild of data centers and then at the same time say that AI is killing everything in its path.
And this is the contradiction at the heart of the entire artificial intelligence debate right now. On one side, you have the bears saying companies are overbuilding, spending too much too fast, with no clear return in sight. On the other side, you have people saying artificial intelligence is the most disruptive force in business history, destroying old industries and replacing them with new ones. But both of those things can't be true simultaneously. If artificial intelligence is truly destroying and replacing everything, then the demand for infrastructure is justified, and Nvidia wins. But if artificial intelligence adoption is slower than expected, and these data centers sit half empty, then the entire spending wave was a mirage, and the reckoning will be brutal. That's the bet the market is making tonight. That's what's riding on this earnings call. So what does Tom Lee actually believe? After watching the debate play out, his position is clear. He doesn't think one earnings report changes the fundamental story. Nvidia's valuation, when you look at what analysts expect the company to earn in 2027, implies a multiple of around 19 times forward earnings. For a company growing this fast, in the middle of a structural shift this large, that's not an insane number. It's actually reasonable. The real risk isn't Nvidia failing to deliver tonight. The real risk is what happens to the software companies, the Salesforces, the Snowflakes, the Workdays, that were supposed to monetize artificial intelligence but are now facing a different threat, irrelevance, not because artificial intelligence failed, but because artificial intelligence got so good that it started replacing the software itself.